Today, we're diving deep into the different types of stocks, growth versus dividend stocks, the distinctions between small cap, mid cap, and large cap stocks, and finally, the difference between common shares and preferred shares. Let's jump in. First up, let's break down growth stocks and dividend stocks. Growth stocks are shares of companies that are expected to grow at an above-average rate compared to their industry. These companies often reinvest their profits back into the business rather than paying dividends. Classic examples include Tesla and Amazon. Investors by hand, we have dividend stocks. These are shares in established companies that pay regular dividends to shareholders. Companies like Coca-Cola and Johnson & Johnson are known for their reliable dividend payouts. Dividend stocks are often favored by investors looking for regular income and stability. Next, let's explore market capitalization, which is a measure of a company's total market value. Companies are categorized based on their market cap into three groups. Small cap, these companies have a market capitalization of less than $2 billion. They can be riskier but often provide higher growth potential. For instance, a small cap example would be Blue Apron or Etsy. Mid-cap companies have market capitalizations between $2 billion and $10 billion. They often offer a balance between growth and stability. Companies like Zillow and Mosaic fit into this category. Large cap, these are well-established companies with market capitalizations over $10 billion. They are typically considered safer investments. Notable large cap examples include Apple and Microsoft. Finally, let's break down the difference between common shares and preferred shares. Common shares represent ownership in a company and usually come with voting rights. However, in the event of liquidation, common shareholders are the last in line to receive any assets. These shares can appreciate in value and may also pay dividends, but dividends are not guaranteed. Preferred shares, on the other hand, typically offer no voting rights but have a higher claim on assets and earnings than common shares. This means preferred shareholders receive dividends before common shareholders, making them a more stable investment but often with less growth potential. In summary, understanding the different types of stocks can greatly enhance your investment strategy. Whether you're interested in growth stocks, stable dividend-paying stocks, or looking to navigate the distinctions between market capitalizations and share types, being informed is key to making smarter investment decisions. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and let us know in the comments what type of stocks you're interested in. See you next time.